Chapter 1 New Conceptual Framework Definition of Accounting. The Accounting Standards Council provides the following definition. Accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. The Committee on Accounting Terminology of the American Institute of Certified Public Accountants defines accounting as follows. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the results thereof. The American Accounting Association, in its Statement of Basic Accounting Theory, defines accounting as follows. Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by users of the information. The important points made in these definitions are 1. Accounting is about quantitative information. 2. The information is likely to be financial in nature. And 3. The information should be useful in decision making. Actually, accounting is an information system that measures business activities, processes information into reports, and communicates the reports to decision makers. Personal planning, education expenses, loans, car payments, income taxes all use this information system called accounting. A key product of this information system is a set of financial statements, the documents that report financial information about an entity to decision makers. These reports tell us how well an entity is performing in terms of profits and losses and where it stands in financial terms. The definition that has stood the test of time is the definition given by the American Accounting Association. This definition states that the very purpose of accounting is to provide quantitative information to be useful in making an economic decision. The definition also states that accounting has a number of components, namely 1. Identifying as the analytical component, 2. Measuring as a technical component, and 3. Communicating as a formal component. Identifying. This accounting process is the recognition or non-recognition of business activities as accountable events. Not all business activities are accountable. For example, the hiring of employees, the death of the entity president, the entering into a new contract are all business activities, but such events are not accountable because they cannot be quantified or expressed in terms of a unit of measure. An event is accountable or quantifiable when it has an effect on assets, liabilities, and equity. In other words, the subject matter of accounting is economic activity or the measurement of economic resources and economic obligations. Only economic activities are emphasized and recognized in accounting. Sociological and psychological matters are beyond the province of accounting. Economic activities of an entity are referred to as transactions, which may be classified as external and internal. External transactions or exchange transactions are those economic events involving one entity and another entity. Purchase of merchandise from a supplier, borrowing money from a bank, sale of merchandise to customer, and payment of salaries to employees are examples of external transactions. Internal transactions are economic events involving the entity only. These are the economic activities that take place entirely within the entity. Production and casualty loss are examples of internal transactions. Production is the process by which resources are transformed into products. Casualty is any sudden unanticipated loss from fire, flood, earthquake, and other event ordinarily termed as an act of God. Measuring. This accounting process is the assigning of peso amounts to the accountable economic transactions and events. If accounting information is to be useful, it must be expressed in terms of common financial denominator. Financial statements without monetary amounts would be largely unintelligible or incomprehensible. The Philippine peso is the unit of measuring accountable economic transactions. The measurement bases are historical cost, current cost, realizable value, and present value. Historical cost is the most common measure of financial transactions. Communicating. Communicating is the process of preparing and distributing accounting reports to potential users of accounting information. Identifying and measuring are pointless if the information contained in the accounting records cannot be communicated in some form to potential users, like the investors, owners, managers, creditors, and other interested parties. Actually, it is for the reason that accounting has been called the universal language of business. Implicit in the communication process are the recording, classifying, and summarizing aspects of accounting. Recording or journalizing is a process of systematically maintaining a record of all economic business transactions after they have been identified and measured. Classifying is a sorting or grouping of similar and interrelated economic transactions into their respective classes. For example, all transactions involving the sale of merchandise can be grouped into one total sales figure, and all transactions involving cash can be grouped to report a single net cash figure. Actually, classifying is accomplished by posting to the ledger. The ledger is a group of accounts which are systematically categorized into asset accounts, liability accounts, equity accounts, revenue accounts, and expense accounts. Summarizing is a preparation of financial statements, which include the statement of financial position, income statement, statement of comprehensive income, statement of changes in equity, and statement of cash flows. Basic objective of accounting. The basic objective of accounting is to provide quantitative financial information about a business that is useful to statement users, particularly owners and creditors, in making economic decisions. In other words, an accountant's primary task is to supply financial information to statement users so that they could make informed judgment and better decision.